What's up, everyone? All right, so unfortunately today we've got a red day, Monday recap. That's not what I wanted to be doing here, but it is what it is. I'm red in my main account and red in the IRA. It's the second trade I've taken in the IRA. Well, I took one last week, and then these were the first two trades I've taken in like 3 months, and made 400 last week in the IRA, lost 1,600 today. So that's disappointing, and I lost 2,300 in my main account, so I'm down 4,000 on the day. Bam, just like that. So, that's the way it goes with trading. It's 5, 6, 7 steps up, 1 step back, readjust, slow down, and then head back up. So the goal tomorrow will just be to close the day green. It's not to be aggressive or to try to make back all of today's losses. Not worried about that. Being down 4,000, it's not an astronomical loss. It's not more than I can make back in a couple of good days of trading, but I got to have my mindset, my focus on just being green, taking good quality trades, and the gains will come. All right, so we're going to break it all down. Today's midday market recap. I know some of you guys really enjoy the red day recaps because you learn more from them than some of the green days. So enjoy, and any questions, any comments, leave them below. I'll come back through and answer them later today. All right, see you guys tomorrow. What's up, everyone? All right, so we're going to do midday market recap, go over the trades from this morning. Today is my first red day after it was like a 12 or so, 11 or 12 day green streak, which was a really nice green streak, but, today's the first red day. So, unfortunately today I'm red both in my IRA account here, where I'm down $1,600, and I'm red in my main account where I'm down $2,300. So, I'm sitting red on both sides, which is definitely not the way that I'd like to start the week, but it is what it is. Today, I kind of got frustrated like right out of the gates. My very first trade on solo was a good trade. I jumped in it at $6, sold it at $6.17, sold the rest $6.08, $5.80, whatever. Made like $350 right out of the gates. Second trade, I got back in $6.30, $6.40 with 6,000 shares. I sold 2,300 shares at $6.59. And I was trying to sell the rest up there, and I didn't get filled, had to cancel the orders. And then I ended up getting filled, as it came all the way back down to $6 and $6, $5.58 and $5.32. And so I went from being up $1,000 on that stock to down $1,000, and that was what sort of began my, sort of downward spiral today. That for me was really frustrating because. And just to back up a little bit, we can look at the gap scanner. I'll kind of show you how I found the stocks I traded. So, this morning started pretty much the same as any other day with our gap scanner here. So if I go time frame and historical data, 9/25, let's say, you'll see solo was at the top of the gap scanner. This was our leading gapper this morning, up 175% with a headline. The problem, I guess, for me was that by the time the bell rang, it had already moved up so much, which I was a little bit concerned about. But we had a pre-market high of $7.26, and we had 3 red candles in a row, and then pre-market, it popped back up. So this was a bull flag pre-market that did not resolve by going to new highs, but popped up only a little bit and then pulled back. So this now takes the formation of an A, B, C, D setup. Point D is where you expect to move over the high of 641 and then a retest of high of day 726. So as soon as the bell rang, I on this one had a bias to jump in and scalp it to the long side, and so I jumped in at $6, first trade, jumping in at 6. And I sold at 6.17, 6.17, 6.08. It hit a high on that first candle of 6.23, and then it dropped all the way down to $5. So it popped up and then came all the way back down. As it surged back up right here, I got back in at 645 because there I saw it breaking that pre-market pivot right here at 641. So I'm back in it at 630 and 645, taking a starter and then doubling, trying to sell on the break through the $0.50, but filling only one of my 3 orders. All right, so that was disappointing. I tried to sell 59, tried to sell more and more, didn't get filled, and so then, I ended up, when I sold 2,300 shares at 60 from my average of like 41 or whatever it was, 42. Actually, no, my average would have been 37. From my average of 37, that was 20 cents. That was $500. So I was up close to $1,000 on the stock, and then boom, it flushes here all the way back down to $5. And so I stop out, and I'm down now $1,000 on that stock. And that frustrated me because, I went from having a nice win to then getting, this good size loss, and it was just kind of disappointing. So I think at that point I was definitely a little irritated. And nothing else on the gap scanner really looked that great. Craig, no good. BLNK, no good. DCIX, tops, shipping stocks, not interested. So we really only had Solo off the gap scanner. And at that point, I was watching the high day momentum scanner. All right, so high day momentum scanner, Solo, and then we have UU, 150, 149, 158, 160, 164, 170, and I'm like, okay, wow, this thing is actually moving up pretty fast, and I think this one, maybe this is going to be the one. All of a sudden it's taking off here. So as it's taking off, I'm like, all right, this looks interesting. I'm going to jump in. I'm starting to think that it has potential for a move to $2. $2 is sort of psychological resistance. So on this one, I jump in it in my IRA account at $1.76, and I take 10,000 shares. And I'm thinking potential is $2, right? So I'm thinking this one 25 cents. That's $2,500. That's kind of what I was looking at as my target, $2. So I'm in at 76. It pops up to a high of 85 right here. I also get in my main account at 76 and 80. I got in with the IRA first and then got in the main account. And, I like it enough to take it in both accounts. And I'm thinking $2 is sort of my back of mind potential. It hits 85 and then comes here all the way back down to 45. So it basically retraces the entire move in these 3 candles. And so I stop out. I have to. I do the right thing. I gave it this little chance here to pull back, and I was expecting it to go higher here, and as it broke the low of this red candle, I stopped out. And so the low of this candle was 65, and I stopped out and got filled with a little bit of slippage at 60 and lost $1,600 in the IRA. So that's disappointing, right? That's a setback. That puts me back down to about $20,000 in equity in the IRA. Uses up all of my buying power until Wednesday, so I'm not going to be able to trade in it again until Wednesday. So just overall, that is super disappointing. I mean, that is more disappointing here than this loss, just because percentage-wise, it's a bigger portion of the account. I can't add more money to the account, et cetera, et cetera. Why did I jump in aggressively on this? It was hitting the scanner, boom, 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 high day momentum. Just to me, it looked like it had the potential to make a move. I really thought it did. The one red flag was that it didn't have news. But, again, with Solo being strong, I sort of thought momentum would carry over to this stock. And anyways, it ends up over the course of the next half hour or whatever, going up to a high of $2.12. So that's even more annoying. It ended up doing what I thought it would with no news. It just didn't do it when I thought it would. My timing was wrong. So, obviously hindsight being 2020, could I have just held the whole thing? Well, if I'd done that, I would have had to hold this from 75 all the way back down to 45. That would have been a $3,000 loss. And if I wasn't willing to sell it down there, then where would I have sold it? Down here? Down here, and then that's a $4,000, $5,000, $6,000 loss, and I can't afford to do that with this account, or even with my main account. That's not the right thing to do. So I took the loss, and then the fact that it goes up higher it is just the way it goes sometimes. So that was UUU. And at that point, I am down below $2,000. I'm down $1,600 in this account, so I'm done with it. Can't trade in that account again. And I'm down $2,000 in my main account, so I'm below my max loss. So I'm like, all right, I'm done for the day. Below max loss. However, I don't actually have my max loss enabled on this account yet. This is my Sterling account, and I haven't set a max loss on it. So I'm sitting here and I see Solo rip back up. And I'm like, you know what? This thing looks strong. It faked out long traders here. Well, it faked out long traders here. Then it fakes out short traders here. Then it fakes out long traders here. Then it, fakes out short traders as it squeezes back up. So I was like, you know what? I still think this one has good potential. I still do like it. So I was like, you know what? I'm going to get back in it. And so here I'm breaking one of my rules, which is to take a trade when I'm down more than $2,000. So I got back in it at 685 and rode the momentum up here through the high of 748. So on this one, I ended up selling. My best exit was 743 and 744, right here and right here. So I made back $2,000 on that trade. And in this account, I was now down only $500. You can see I'm down $1,500 on UUU and up $1,000 on that one. So I was like, all right, well, now I'm kind of getting myself back in, back in the green, making my way back up. So that was on Solo, and now I've built a little bit of a cushion between me and being down 2,000 in this account. So I was like, all right, well, I guess now, I can keep trading. Now I've got myself back up. Maybe I broke the rule to do it, but now I'm in better shape. So UUU is back on the scans. I don't trade it, whatever. CCCL hits the scans. And, on this one, I'm like, all right, well, I don't know. I look at it and it's just squeezed up from 240 to 260, 280, $3, 327, 337, 340, and it gets it looks like it's about to get halted. So I take 3,000 shares as it's about to get halted at 337. And it doesn't get halted. It ends up continuing to trade, and I end up stopping out at 276 as it drops all the way back down here. So then basically I gave back what I'd made on the Solo trade, and I'm back down to $2,300. And was it worth breaking the rule on the Solo trade only to give back that profit, 15 minutes later on CCCL? I don't know. It's just one of those days. I'm kind of like, did I let emotional or frustration take, get the better of me by taking trade number 4 and 5, et cetera, et cetera? I don't know. Did I have 3 consecutive losers? Kind of, because I took 2 trades on UUU. I don't know. I had a loss on Solo and then 2 losses on UU, but they were on the same time at the same time in 2 separate accounts. I'm not sure. I think getting back in Solo was a good trade as it broke back up over the high a day. I think that was the right move here. And I think this could have gone up towards $8 if it had broken over 750. So that scalp around 714 right here and the scalp right around $680, $7, I think that was the right move. Those were solid trades. If I hadn't been down below 2,000, I certainly would have taken the trade. So that was a good trade. CCCL, this was an aggressive trade, a little bit of a risky one because it had come up so much. However, it's a former runner, as you can see, with this big day where it squeezed from 2 all the way up to 7. Pulling back here for a couple days, squeezing up, made a little bit of a move on Friday, sold off, started to make a little bit of a move today, it sold off. If it keeps doing that, it's eventually going to have a day where it does open up. I only took 3,000 shares. So I think that shows that I was, using kind of a little bit of composure there. I was willing to be aggressive, but I was mindful of the fact that this was, a fairly high risk trade and not one that I should have taken huge size on. I think if I had jumped into that with like 6,000 or 10,000 shares, that would have been very emotionally impulsive. That would have been really aggressive. Jumping in with 3,000 shares as a starter position, that was fine. And then in the next candle, it flushes down to 3. I hold it for a second. It drops to 287, and I'm like, let's watch first candle to make a new high, see if it can get back up above 3, and then, move higher. And then it just kept going lower, and I was like, this is ridiculous. I got to cut the loss. So, I don't know. Probably the right thing on that one would have been just to wait for the first pullback, but it looked like it was going to go into a halt. They usually open higher, and then I would have been looking at $4 as a possible target. So maybe on that one, I should have just waited for it to get halted and then buy it out of the halt, or wait for the first pullback and then take the first candle to make a new high. Rather than just jump in as it was squeezing. Of course, if you jumped in at 285 as it was squeezing or at 3 as it was squeezing, you would have done really well. I just waited a little bit on it. So, again, this is one of those hard things with trading. Sometimes you get rewarded for breaking the rules, like on solo, and the rule not being related to that type of stock, but around my personal max loss. And then sometimes you get punished for breaking the rules, as I did on CCCL. And at the end of the day, I'm basically flat over those two trades, but left with having to think about why I broke the rules and whether it was worth it. If I would have been better off just walking away after the solo and UU trade. And, I certainly would say that, yes, if I had taken, 6,000, 9,000, 10,000 shares of this and then lost 3 or 4 grand, I would have been very frustrated with myself, very disappointed that I took that trade with that much size, and I'd be in a very different kind of emotional spot that I'm in now. But as it stands right now, I'm like, well, I think I did have the right idea. I was just a little early on it. The proof is that it did end up hitting my target of $2. So I had the right idea on that, just got stopped out. It is what it is. Solo, for a stock with as much range as it had, I really wasn't able to capture a lot of profit, which is disappointing. And I think that also just goes to show that sometimes when you have these really big moves pre-market, that by the time the bell rings, it just ends up being choppy. And really, the bulk of the action here was pre-market on about 50,000 shares of volume, really. And there just wasn't a lot of opportunity there to get in it. So, it is what it is, down 4,000 on the day between the two accounts. I'll live to trade another day, which is important. You got to draw the line someplace, and certainly I could keep trading right now, but I'm not going to. At this point, we're past the first hour of the day when I make the most money. It really doesn't make sense for me to keep trading. My best bet for the next big win is tomorrow between 9:30 and 10:30. That's statistically when I do the best. It's a little bit of a setback. I was up close to 40,000 on the month, now back to 36,000, but I'm still green. This is only my third red day of the month, and although it's the worst red day being down 4,000, my best green day of the month is being up 8,200, which is a great green day. So, keep the green days bigger than the red days. Try to keep as much space between the red days as you can, and you'll do okay. So tomorrow, my goal will just be to close the day green. I'm not going to be able to touch, I'm not going to be able to trade in the IRA account. That one I've got to wait for cash to settle. I had a trade on this last week and made some money. Today, I stepped up to the plate, was a little aggressive, and it was the wrong trade. That's definitely disappointing. So my next trade on it, I'm going to have to be really, really confident before I jump in. I really don't want to have, it's one thing to have a loss, which is fine. That's part of trading, but I don't want to keep going down. I have to really manage this one tightly because I can't add more money into it until January 1st. So January 1st, I'll be able to add, I'm trying to remember what the IRA contribution limit is. I think it's $5,500. So I'll be able to add $5,500 in January, which would have today put me over the PDT rule. But I really was hoping to get there on my own without having to do another contribution. But at the end of the day, it doesn't matter, especially since this is an account that I'll be trading in until I'm 56 years or 59 years old or whatever it is. So it's just getting it started that's sort of the hard part, and getting it started without having margin. That's the really hard part. Now with SureTrader and CMEG, those brokers down in the Bahamas, without having the PDT restriction with $500, you can trade on margin. You can trade 10 times in a row, et cetera, et cetera. With UUU, because I know I can't sell it and then get right back in, instinctively I hold it longer because I'm like, well, let me really give it a chance, because if I sell this, I can't take another trade until Wednesday. So I just have to sit until Wednesday before I can take another trade. So I really want to make sure that it's going to not work. I don't want to just break out or bail out as much, because when you do break out or bail out and you sell immediately, that's because you're willing to get back in if it proves itself, if it starts going back up. But when you can only take one trade every 2 days or 3 days, you don't really do that as much. You take an entry and you want to give it the chance to work, even if that means you are down on it for a few minutes. So anyways, that's a little bit of a setback here, but it's not my first red day in the IRA either. I've had a couple of other red days. It does mean most likely I'll close the month red in the IRA by about $1,400, which is going to be my first red month in the IRA, but it is what it is. I'm not going to get bent out of shape about it. I'll just, get back on the horse tomorrow with the main account, try to rebuild some momentum, and hopefully, maybe by Wednesday or Thursday, we'll see something that's worth trading in the IRA and whatever. I'll be able to kind of make some progress there. So, yeah, that's where I'm at here this morning. A red day recap, but a day where I tested the limits a little bit by breaking a rule and still stayed within my kind of limits of max loss and emotional composure. I didn't throw it all to the wind and just start revenge trading my account. If I did that, I would have bought DGLY as soon as it hit the scanner, and I would have bought DCIX as soon as it hit the scanner, and GBLS and NDRA and KNDI, and I didn't. If I had jumped in GLBS as it spiked up, what would have happened? I would have been holding it in the red down 50 cents right here. DCIX, same thing, be in the red. So, I knew those ones didn't have potential. They weren't worth touching. And of course, by this point, I was red more than I was willing to, keep trading through. So that's it for me. I'll be back at it first thing tomorrow morning. Hopefully we see some good opportunities and can get another green day. But, it is one of those things, sometimes it's 2 or 3 steps forward, 1 step back, another 2 or 3 steps forward, 1 step back. Sometimes you'll be in a market where it's 1 step forward, 1 step back, 1 step forward, 1 step back, and you're just doing that for, a couple of weeks before things really start to open up. That can become a little draining. It can get a little irritating, and so it's a good opportunity to step back, practice that mindfulness that we talk about, especially in FOMO Fridays. Do your meditation. Remind yourself you're the same trader who had this green streak or had this great green trade, and you trade the market you're in, not the market you want to be in. So sometimes that means just sitting tight a little bit until the next hot streak opens up. All right, so that's it for me. I'll see you guys back at it first thing tomorrow morning. All right, bye everyone. If you're still watching, you must have really enjoyed that video. So why not subscribe and get email alerts anytime I upload new content? Remember, when you subscribe, you become a member of the Warrior Trading family.